I don't know if it'll be the world's biggest economy, but let's say it's like a top 10 economy. And it's weird in some ways, right? It's going to be global. It's going to be decentralized. It's outside the control of any government. But like, if we think of it as an economy, it's going to have the same financial institutions and markets that exist in every economy in the world, right? So there's going to be exchanges, and there's going to be banks, and there's going to be payments companies, and there's going to be asset managers. And my co-founder and I had both thought a lot about life insurance or long-term insurance as a sort of savings. People might not think of it that way, but basically these are companies that help people save for the long term. They do retirement savings and annuities, or they even do short-term savings and things called like insurance bonds or guaranteed investment contracts. And then they help people save intergenerationally through permanent life insurance in particular. So we just had the idea, okay, as there is a life insurance company for every developed economy, there should be a life insurance company for the Bitcoin economy. And honestly, we didn't know what that meant really, but we started the business and it's been super successful and we've learned a lot about it.
So when you were defining what that meant, what are some of the key things that helped you answer that question? And for listeners, what does it mean to have like a first principle approach to redesigning insurance when you have a scarce asset like Bitcoin?
We fundamentally, what is fascinating to us actually is like permanent life insurance, at least. And permanent life insurance means it lasts your whole life. So their life insurance often is split between term life, which lasts a certain term, and a whole life or permanent life, which lasts entirely until you die. And one thing that we found fascinating is like whole life is like the original HODL. It's the original like saving for your kids and intergenerational wealth and retiring your bloodline. So we pretty early understood that, okay, we believe Bitcoin is going to be the best durable store of value in the world. Maybe not, by the way, day to day or week to week, but when you think like decade to decade. And that is at the heart of what we do, because that is what life insurance companies do, is they make these really long time promises. It's probably not something that lots of your listeners have thought about, but basically the point of life insurance is to save for your kids or your nieces or nephews or your wife or whatever. And then it's also the case that basically because we as like society or governments or whatever have decided that we don't want orphans and widows to starve, there are incentives to buy insurance. And those incentives are expressed as tax privileges. So life insurance is also a tool to do tax and estate planning. So we sort of brought all those things together. Well, to be honest, we didn't actually, when we started the business, we didn't like know all these things. What we sort of knew is like, we thought Bitcoin was going to be a great store of value forever. Its purchasing power is going to go up and people should protect their families and save inside Bitcoin. And the way we do that, I think, is somewhat special. So we have a regulated, licensed life insurance company in Bermuda. And basically that company truly is on the Bitcoin standard. For that company, one Bitcoin is one Bitcoin. Everything it does is in Bitcoin. People pay their premiums in Bitcoin. We pay claims like benefits out in Bitcoin. And then we do everything in between in Bitcoin. We do our audited financials in Bitcoin. We do our regulatory filings in Bitcoin. We do our, like all the math that makes an insurance company go is entirely in Bitcoin. On the audited financials, I think we're the only company in the world who has externally audited financials and they're stated in Bitcoin. They're not converted to dollars. Like there's a B in the corner and the whole thing's down to the Satoshis. And to us, this was obvious from the very beginning. Okay, if we're going to run this company, let's run it as a Bitcoin company. So that's how we actually do it. And then the why is helping people plan, save, tax optimize with their Bitcoin.
So Zach, before we jump into the products more and kind of what you're offering and how the mechanics work, how did you get to developing this company? What were you doing before? And when did you become a Bitcoiner?
So I'm sort of a fintech guy by background. I started my career actually doing consulting in the civic sector, like governments, and I did a lot of work on financial inclusion and financial empowerment. I ended up as the head of innovation of Newark, New Jersey, when Cory Booker, now a senator, was mayor. And I got really interested in this question of why do people in West Newark not have bank accounts? Why do they do like check cashing? So I guess I come from an ancient Bitcoin strain, which is like profoundly interested in like extending financial services to low income people. And when Corey ran for Senate, I was like, I don't care about the Senate. So I cold applied to the best fintech company I could find on Hacker News. And I was the 37th employee at Stripe. And then in the worst financial decision in my life, best life decision, I got into Y Combinator and I built a different company called Standard Treasury. And we built like technical integrations between fintech companies and between banks. We ended up selling that business to SVB, Silicon Valley Bank. But I actually got my first Bitcoin. This is going to sound maybe like a special story, but it's completely a common story, which is our Coinbase was really struggling. This is like 2015 with payments and banking and know your customer stuff. They were worried about getting debanked. And they offered to acquire our company to have the like 8 of us work on financial services. Another time I could have made a boatload of money, but didn't. But I received my first Bitcoin from Brian Armstrong showing me how Coinbase worked. And again, this was like his gimmick. He would like get people to sign up by like sending them a Bitcoin, which at the time, I don't know, was worth $100 or something. So that was sort of when I got interested in Bitcoin. And that stuck. Joining Coinbase didn't stick. And then I sort of like dollar cost average into Bitcoin over time. I thought a lot about financial services. And then we started this business, as I said, in late 2021 with this conception there's going to be a Bitcoin economy. And we are incredibly motivated by this idea that if you're a middle-class person in Argentina or Nigeria or Turkey or India or Indonesia, you often don't save for the long term. You don't buy life insurance for your kids. You don't plan for your retirement. And one of the reasons you don't do that is because you're going to live longer than the Argentinian peso, just historically. And by the way, this is true somewhat in the United States. Like the dollar will be here. But I think sometimes I have a 7-year-old who was born in 2018. If I bought $1 million of life insurance coverage in 2018, I've seen the purchasing power of that policy go down 25%. So we sort of came to this business with this ambition to really expand the long-term savings market. So my like sort of BS catchphrase that I use with venture capitalists is like, our ambition is to serve 1 billion people, and we want to reach them using Bitcoin, the greatest like digital store of value in the world. And we want to serve them profitably with like AI and automation. And that has been a through line of my whole career around financial inclusion and technology, but sort of culminating in the hardest money there is.
And I love that because you saw a problem on the streets effectively of like, why
literally
can't
on the streets,
normal people get bank accounts, right? They're in the best American dream living in America where we should all have access to these financial tools. But to your point, there's tons of barriers that might be preventing people from getting that. And you're expanding, you're based in Bermuda for where you guys are licensed and regulated. And then these products are available to anyone basically in the world, except for sanctioned countries effectively.
Yes, we are able to operate anywhere in the world, I would say, except for sanctioned countries. We have to be able to underwrite you. We are still like an insurance company who's taking on mortality risk. That is, people who are sick and about to die want to buy life insurance. So we have to make sure you're not sick and you would prefer not to die, which is most people. So there is a practical reality that we're primarily serving Canadians and Americans and Brits right now. But you should still come to our website and sign up because that drives a wait list. And that wait list is sort of how we decide to which countries we expand to.
And so do you guys, when you're reviewing the tax policy, is that on a per country basis that you have to provide guidance? Or how do you take into all these different tax codes when you're on a Bitcoin standard?
What a great opportunity to say that I'm not your tax advisor and you should consult your local accountants and lawyers. What I'll say is the rules tend to be pretty similar across jurisdiction. I don't know the absolute nuance of the Australian tax code, but I would say that the world has sort of gravitated towards certain product designs. So our current product, as I said, is it's whole life. So it lasts your whole life. And because you will eventually die, hopefully many, many, many long years from now. There will eventually be a payout. And then our product really, it's like an insurance product from the 1830s. Basically, you pay us a certain amount, and you can either do that as a lump sum in the beginning or as a 10 pay. And you might be like, why would I choose like one versus the other? And that is the answer to your question. It is about the particular tax codes of individual countries. So in the United States, for example, if you want to get all of the best tax benefits, in particular, if you want, well, I'll tell you what those benefits are, but if you want all those benefits, you need to have the 10 pay. And then sometimes if you're in other countries, like it just doesn't matter. And you're just like, oh, I'll pay now. But the fundamental product is something, I'll use the American example of the 10 pay. So you pay, let's say, I'm going to use what may be big numbers to some people, small numbers to other people, but you might pay like 1 Bitcoin a year for 10 years. So you've paid us 10 Bitcoin. And then we promise a fixed guaranteed amount that's a bigger number than that, like 13, 14, 15, 16. So it depends on your age and your health and stuff. And on some level, that's the whole thing. Like you give us 10 or you pay 10, and whenever you die, we pay you 50. That's like the policy. What's cool about that? One is you get hit by a bus tomorrow and you've only paid one premium, you're getting 15. Prefer not to get by a bus. The second is we're turning 10 into 15. We should talk about how we do that. But basically we get like relatively low yields on Bitcoin. And even if you could do exactly what we do, which is get 2 to 3% yields on Bitcoin, which you probably can't because we do like very not complicated, but we do institutional stuff and there's a lot of expertise there. But even if you could, you would owe taxes every year. You would owe interest income tax. So inside a policy, it's like a 401k or an IRA or something, like it's compounding tax free. So we can get further than you could, even if you were investing this Bitcoin yourself. The third thing is it goes to your kids income tax free or your your wife, if you're beneficiaries or whatever. And the last benefit, which is why it's a 10 pay, is you can borrow Bitcoin back out of the policy over time. And that is new tax basis Bitcoin in your lifetime. So if you believe that Bitcoin is going to be worth much more in dollar terms in 10 years or 15 years or 20 years, this gives you optional liquidity. And that's liquidity without any margin calling. That's liquidity without the possible be blown out. Because basically you're borrowing against like amount we owe your beneficiaries.